In this video, we wanted to discuss the biggest consideration that traders should have when looking at one-phase prop firm challenges. Stick around to the end to avoid losing a bunch of money buying faulty or ineffective one-phase challenges. This video is sponsored by Prosperity Algo and our Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns automating the London breakout and the opening range breakout? Then click the link in the description. So really the big issue here is that many one-phase providers provide you with such low leverage that it makes certain types of trading strategies exceptionally challenging. And particularly if you prefer to trade with EAs or expert advisors, Forex robots, a lot of the strategies which these bots use are either scalping or sometimes grid martingale style systems. And through heavily limiting the leverage available, it actually makes applying any of these strategies quite challenging to the account. And I wanted to dive in essentially as to why that is and what you can do about it. And if you want to use these types of systems, which prop firms should you more or less look out for? And or if you're trading a low leverage prop firm or you just prefer to use less leverage, what type of systems would be more appropriate or what bots would be more appropriate to that type of challenge account? So here I just wanted to kind of show some proof of what I'm referring to by low leverage. And here's a few of probably the most popular one-phase prop firms currently on the market. We have Blueberry Funded here, and we can see that both indices and metals and commodities only have 1 to 10 leverage, which is quite modest. Here we have Rocket 21, and they're showing on the Apollo 11 one step. We have 1 to 10 for gold and only 1 to 5 for indices. So it's actually even skinnier. These guys almost went... They had some challenges last year, but I think 8cap has stepped in a bit more in detail. So now we're seeing a resurgence of Rocket 21, particularly in certain like South American markets. I think they have quite a significant market share. So it could be interesting for some of our users as well. We also have Aqua Funded, and I imagine Blue Guardian is similar as their affiliated companies. But you can see once again, if you use either the instant funding or if you use I think this might apply to their one steps as well. We have very limited leverages, leverage around 1 to 10 too. And even with E8 markets here, we can see that metals and indices are 1 to 15, 1 to 15. So generally speaking, quite low leverage. And why that is problematic is that I'm going to just pull up my little calculator here so we can walk through it in detail. But if you have, let's say, a $10,000 account and you're using 10x leverage, or you only have 10 times leverage, that means your buying power, let me just zoom in a bit for us, is only $100,000. And depending on how many orders you want to place simultaneously, this can also change. Like if you have 2 orders, you can only spend $50,000 or allocate $50,000 per order. But let's say just for simplicity's sake, we only have 1 order at a time. And what that means is that if we assume that the price of gold it's a little bit different than this right now, but let's just pick this as a point in time, and we're trading lots of 100 ounces of gold. That means that our max lots here, based on the buying power that we can buy, is around 0.35 lots. So here, with 10 grand, with 10x leverage, so $100,000 of buying power, we can only buy 0.35 lots. And what this means is, let's say we're trying to use a very scalping type system or a very scalping style system with a reasonably tight stop loss of 0.2%. That means that our max daily risk here is only $100, which is around 1%. So this is potentially quite complicated depending on the style of system you're trading. So if you're trading something which is like our Golden Time Bomb system, which is more of a scalping style system, if you're limited at 100% max daily risk, that means that on any given trade, because it's an inverted risk reward system, you can make between, let's say, 20 and $50. So because of that, you are essentially limited in how quickly you can pass prop firm challenges with this amount of leverage. Whereas if you had 20 times leverage or even 15 times leverage, you could then all of a sudden risk 2% per trade as opposed to 1% per trade. So just based on the fact that if you want to trade a scalping style system with a tight stop loss and particularly an inverted risk reward, you have to be really careful with the amount of leverage you have access to. And this is even more relevant for martingale style systems. I'm not a huge fan of martingales for your personal account, but in a prop firm, in theory, it's actually not a bad approach because your risk is inherently capped, right? And this type of system would make a martingale, or this type of leverage would make a martingale almost impossible, because martingales, they scale in essentially and they never close trades until price kind of goes into their favor. I have a video on them if you guys are interested in learning more. But martingales require a ton of leverage because you just keep opening positions and keep opening positions. So with this 10x leverage, your initial trade size is going to have to be a micro lot just to be able to support that scaling. So it's very, very harmful for that style of system. And you can see similar math for US 30, but the point remains the same, that if you want to trade a scalping system, if you have very low leverage, you're going to be rather limited. And particularly with US 30, just because like if you can use even tighter stop losses with US 30, and because you can use even tighter stop losses, typically your lot size is bigger. General rule of thumb is the larger your stop loss, the smaller your lot size will be, right? Because if you have a super tight stop loss, your risk is limited by that super tight stop loss. So you can use an enormous lot size. So the smaller your stop loss is, the bigger your lot size needs to be and the more leverage you need. So with this type of approach, I hope I'm making sense. You really need to be careful with the amount of leverage you're using. So take away from this, if you want to scalp or if you want to use martingales, be really careful with your leverage provided, because it can inherently massively limit the strategies which you can trade. So in terms of scalping considerations, that's exactly what I just said. If you were using an inverted risk reward system, so that means that your winners are smaller than your losers, but you have a very high win rate, you will likely be limited by this. Time bomb still works very well because you can still risk 1% per trade, so you kind of have to be conservative. You can't take an aggressive approach on Blueberry. That's why I personally am running a Blueberry challenge with our bots. I'm just taking a very conservative approach, so it will probably take some time to pass. But if I wanted to go aggressive with Blueberry, it just wouldn't work because I simply do not have enough buying power. And to my second point here, if you buy any sort of EA that uses a grid martingale, you need leverage. So this type of approach is likely going to be rather ineffective. And kind of to my earlier point, if you have a low leverage style prop account, like how should you trade? And really the secret here is high risk reward, because effectively you want to be able to risk 1% and make 3%, or risk 1% and make 5%. And you can even couple that with more of a swing style. So here's an example of a bot I recently developed on the NASDAQ, which simply, if it thinks that the weekly trend is going to be bullish, it buys at the open and it sells at the close. So it buys at the open, sells at the close day by day to avoid swap fees. And this would be perfect, right? Because here you can risk 1% and make, I don't even know, 3.5%, or risk 1% here, maybe close break even. But this style of system is perfect because A, you're using a larger stop loss, so your lot size can be quite a bit smaller because you're risking based on the combination of your size and your stop loss. And secondly, even if you risk 1%, you still can capture significantly more profit because you're using a high risk reward system. So really it comes down to using the right tool for the job. Like you wouldn't use a hammer to put in screws, right? So if you want to pass these types of challenges, I would highly recommend looking at more high risk reward systems. I have found those, generally speaking, work better on indices. Gold is, at least from what I've found so far, is a bit more challenging to make work with higher risk reward systems because you don't have as much volatility as, let's say, the Dow or the US 30 is amazing for this. So really just you have to match the right tool for the job. And if you want to use a scalping style bot with high risk and a more aggressive approach, just make sure you buy more of a higher leverage prop firm challenge, with FTMO likely still being the leader in this category. Guys, hope this was helpful. Drop me a comment if you have any questions, and take care.